In the short term, I think the market can go back to ignoring the current set of geopolitical events, at least for the time being. But one should always be cognizant of what events are out there in the background. Um, I'm taping this Wednesday afternoon, January 8th. At this point, we were seeing the market rallying after selling off sharply overnight. In the latest set of exchanges between the US and Iran, markets sold off sharply when the news broke that Iran had launched a series of rockets at US bases in Iraq. Then the market came off its lows and was more or less unchanged this morning, or slightly higher, when it appeared that there were really no casualties. And then the market took off again when the president basically confirmed that there were no casualties, and more or less it appeared that this was a face-saving move on both parts. Iran retaliated, though they didn't actually do anything that would escalate the conflict further. And I think the markets were happy to see the president take a path that also didn't escalate things in the short term. So we saw the natural results of that kind of move. We saw crude oil sell off, although it had actually started to sell off, last session, but it sold off about 4 or 5% today. And these are the type of things you'd expect as a geopolitical event cools off. Markets don't love these sort of things. Markets are very good at pricing things that they're used to pricing in: earnings, sales, dividends, interest rates, all that sort of stuff that you hear about routinely. And the market is a good discounting mechanism on average for getting these things right, for getting the market consensus. It's very difficult because we're talking about second order effects or worse, about how global events affect stock prices. What does a Middle East conflict mean to the price of Microsoft? We could go on for several minutes or even longer debating on how that could be helpful or harmful to a large American company of that nature. But outside the oil and defense industries, geopolitical events in the Middle East don't really have a first order effect. There's a second order effect, and that becomes much more subtle and hard to reckon with. And so markets overreact or underreact. They act erratically when faced with those sort of events. So the lesson to take away is, unless you really have a strong feeling about either the broader market or the specific political news that would be in play, it's really best not to chase your tail around these sort of events. When you see news of this nature, yes, there were some very important selling and buying opportunities that presented itself over the past few sessions, particularly if you're awake overnight, and astute traders could take advantage of that. But for the most part, if you're not a moment-to-moment trader who's got a gamma position to hedge, or really just like to speculate based on technical levels, or just gamble, which I don't advocate, it's best for the average investor to take a breath, step back, wait till there's some clarity, and then resume your investment thesis around it, or incorporate the new news into whatever your investment process is.